It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, breaking down for you the Australian property market. As we head into the Christmas New Year break, some of you will be travelling away today and tomorrow on the roads that are full of inattentive drivers on their phones and easily distracted. So make sure that you stay alert, vigilant and concentrated across this festive period of time. And if you are on these long trips, look ahead down the road. You know, most people only look between 5 and 10 metres in front of them. Try looking 80 metres in case some idiot is driving on the wrong side of the road. It is a Tuesday, December the 23rd. It's been a very big year on the property ladder, marked by multiple interest rate cuts, strong price growth, new housing initiatives and continued pressure on rents. Let's take you right now to Sydney and catch up with Anthony Landau, Managing Director and Mortgage Broker, of course, of Equilibria Finance. Anthony has been one of our many contributors throughout the 2025 year. Anthony, as I mentioned, the 23rd day of December, plenty of people racing around doing their Christmas shopping. I said the other day, thankfully, we don't do that in our family. All of the nieces are now adults, so they don't get any presents. Have you done your Christmas shopping? Have you managed to get through it all?
G'day, Craig. Great to be here, mate. A couple of days from Christmas. And yeah, look, I have snuck my Christmas shopping in, but I heard something very interesting earlier. 20% of Australians do their Christmas shopping on Christmas Day. So there you go.
Christmas Day? They're doing you mean Christmas Eve?
No, Christmas Day. I'm assuming they drop into a service station or something. So I don't know how that works, but I heard it this morning. 20% of Aussies do their Christmas shopping on Christmas Day.
Wow, imagine just how much more expensive those Christmas presents are going to be. Now, as a mortgage broker, you're on the front line every day working extremely closely with clients and seeing the real challenges that they have been facing, especially across 2025. How are the young Australians actually navigating housing affordability right now?
Yeah, good question. And I want to go through this in two ways. There's a shift in what people are doing. Deloitte Access Economics did some research that found that major milestones like leaving a home and starting a family are being delayed. In 1981, about 33% of 20 to 24-year-olds were living with their parents, but by 2021, that was over 60%. So people are delaying making decisions on essentially entering the housing market. The biggest factor here is around affordability. Average home prices rose 67% in the decade to 2023, while weekly incomes rose 20%. That pretty much says it all. Notwithstanding that, just to cover off quickly, there are some ways that are helping first home buyers, and I'll just quickly run through them. Some of them rolled out this year. The Help to Buy scheme, which is the shared equity scheme where the Australian government can contribute up to 30% on existing homes or 40% on newly built. The 5% deposit scheme, which we all know about, shifted the parameters in as of 1st of October to lower the threshold to get into that. First Home Super Saver scheme, which is a tax-effective way of creating savings through super. And there's ways families can support through gifts and family guarantee loans. Lots of ways to people get in. Affordability is the big challenge.
Yeah, no doubt about it. And next year that is set to continue. So let's talk about the interest rates because it's been up and down, yes, no, starts and stops. The economy has gone through some changes as the year progressed. It provided us lots of commentary from a commentator's point of view, which will also carry into 2026. How do you see the current rate trajectory evolving, and what should borrowers, do you think, be paying attention to as we look ahead to 2026 on the horizon?
Yeah, it's incredible. 3-4 months ago, I don't think there was one economist not forecasting at least one or two more rate cuts leading into 2026. Fixed rates were under 5%, variable rates were dropping, the competition was strong. 2 months ago, we got the CPI data, which showed that CPI inflation was back out of target range. And overnight, virtually, the conversation around interest rates has shifted back to looking at an interest rate rise. In fact, some of the banks, some of the economists are forecasting a rate rise now as soon as February, when the RBA board meets for the first time into 2026. Fixed rates within 2 or 3 weeks had already adjusted. Variable rates from providers, we noticed as mortgage brokers, the sort of rate discounts we were getting were almost stopping or were less. And the conversation with home buyers was looking at rates are going up, that's going to impact what I can do. I think it'll take a little bit of momentum and huff and puff away from some of those home buyers. So a real change in conversation in the back half of 25 in terms of what's happening in rates in 2026.
Yeah, it's been a very busy year. Not as volatile, I suggested a few days back, as what 2024 was. But hey, it depends on where you are in your life. Have you bought a property? Have you held off buying a property? All of those aspects and machinations. Now, as we look for the upcoming break and being with our friends and family and catching a much-deserved breath, next year probably holds another active real estate market that we're all interested in the way that it evolves and unfolds. What is going to be your outlook for the property and lending landscape for 2026? Where are your thoughts and projections at?
I remember about this time last year, 12 months ago, economists were forecasting housing market growth of maybe 3 to 4%. Well, we get to the end of the year and nationally the market's growing around about 7.7%. I think what we're going to see in 2026, given the talk now around interest rates, given the talk around affordability, some of these capitals are now becoming unaffordable with their median house prices. I think we are genuinely going to see a slowdown in the rate of growth. Supply is still going to be a challenge, how much people can afford to do. The other thing that potential rate rises are going to do is it's going to impact buyer sentiment. 2025 saw 3 rate cuts. That really boosted buyer sentiment, both for home buyers and for investors looking at getting in the market. So we're going to see growth, but I think the rate of growth is going to be a little bit more subdued in 2026. Market sentiment might slow down that rate of growth.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
So let's catch up with Andrea Heading. You don't come from the real estate industry per se. You're bringing in a fresh perspective there for the Real Estate Institute of South Australia.
Correct. So a commercial background. From my perspective, I've worked across government, motor cars, transport, tourism, digital startups. So a background in a lot of areas that in businesses that need a fresh perspective on looking sort of really underneath the bonnet, because sometimes you can be quite insular and be really specific on your industry, but it's more of industry experience outside and bringing sort of some practicalities I've learned on the way into the Real Estate Institute here.
You would be a little bit of an outlier as far as that's concerned, because I speak to a lot of your equivalents in different markets around the country, and they're all coming from real estate backgrounds.
That's right. My big thing for me is about membership, getting to know the member. That's sort of, and what a member journey looks like in terms of, representing real estate agents. And secondly, I've worked really closely with government over previous jobs I've had, and we're sort of in a state, particularly in South Australia, of massive reforms from rental tenancies, what will happen in the Land and Business Sales and Conveyancing Act. Government takes a particular approach. I think dealing with government takes a particular approach as well. And from my perspective, it's all about how to collaborate. What does collaboration look like? But particularly as we represent, property investors, landlords and the real estate market. So, fresh eyes.
We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
Now, Christmas, it is a time of planning and scheming when it comes to either getting into the real estate market for the very first time, or perhaps you are buying a second property and need to do the numbers around affordability. 2025 probably has been a year focused especially on that affordability word. What advice, Anthony, would you give to anybody planning to enter the market next year as they think, they ponder, they wonder what is the year going to hold in terms of them getting onto the property ladder?
Yeah, Bart Cummins, horse racing legend in Australia, once said patience is the only thing that doesn't cost you money. And I think for 2026, for a home buyer looking at getting into the market, looking to upgrade, or even an investor, patience, I think, is a critical word. Understanding exactly what you're able to afford and what you're comfortable paying, but also understanding where you're able to afford. That's now a new conversation. Not only what can you afford, but where can you afford? Can you actually afford in the market where you want to live? Are you changing your strategy to move to a regional market, to actually move city and change job, or do your job from another city? Or in fact, make the decision that you're unable to buy a home and buy an investment? None of these decisions are a knee-jerk decision. They take time, and time, planning and patience in 2026, in my view, will hold you in good stead to position yourself, get in the market. Once you've got your strategy in place, come and see us, go and see your mortgage broker, get your pre-approved ready to buy when that place comes along. Do your planning and be patient.
Yes, plenty of good advice as we head into 2026 and also Christmas Day. You'll be looking forward to just, sitting down, just having a bit of a breather. Typically, what is served on the Landau table when it comes to Christmas Day? What's the good stuff that you're eating?
What's the good stuff? Well, we rotate it around the family, but generally the good stuff involves a bit of seafood, ham. Last year we had a lovely lamb shoulders, plenty of food. Everyone contributes a bit, and it's a really nice day for all of us to get together on Christmas Day. I've still got to actually get my contribution for the day organised, so I'll probably better get myself organised there. But yeah, looking forward to the day.
All right, Anthony, well, you have yourself a fantastic Christmas and a great new year coming up at the end of 2025. You've been very busy with your commentary across the year. In fact, you've been here over the last 3 years contributing to what is happening in the real estate market. I look forward to your company back in 2026, so catch you then.
Yeah, great to have been part of it. Looking forward to 26, and stay safe on the roads if you're driving, and enjoy that time with family and friends over this Christmas break.
We dive deep into topics like buying, selling, investing, and maximising your property's value, from mortgage advice to the latest property data and trending numbers. Your real estate journey starts here.
Learn the rhythm. Now, the rhythm of an auction, it's a real thing, isn't it?
It really is, yeah. I think on average, most of my auctions take between about 7 and 9 minutes. It can move very, very quickly. I've had a number of buyers turn up 5 minutes late to an auction and they've already missed it. So great idea. Go and see some others. Get your head around them first.
What about the hidden cost of building inspections? Because buyers often, I don't know why they skip the pre-auction building and pest inspections to save money. It is absolutely insane. If you win and discover problems later, hey, it's too late.
I even offer for my buyers that have already conducted a building inspection to provide copies to other buyers at a reduced rate. And even with that, the buyers won't take up the opportunity to review a report and find out what's wrong with the property. It's like they want the surprise almost.
We connect you to the best real estate information across Australia. The Real Estate Podcast.